Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Right across the board, markets were whipsawed as the US dollar index fell to a 13-month low following Friday's chairman's rate discussions at the Jackson Hole Symposium. Fed Chair Powell stated the time has come for policy to adjust, highlighted that upside risks of inflation has diminished, and he signaled a likely rate cut next month, citing a cooling labour market and inflation near the Fed's target of 2%. However, the US Central Bank emphasised that the future discussions will be data dependent, and with key indicators, including the Q2 GDP in the US, the Fed's preferred inflation gauge, the PCE, and the non-farm payrolls, are all of which will be reviewed before the Fed's meeting in September. So as we turn to the Australian dollar's technical outlook, we can see there is bearish divergence since the market reached its objective of 68 cents. Now I feel with the divergence likely to strengthen, we could see profit taking returning and looking back towards the region of 67.60 to around 67 cents. With any upside attempts around 68 figure 40 to hold in the short term. And with the dollar index, as I mentioned, dropping to a 13-month low of 100.60, with the July 2023 low of being 100.55, it's only around 100 points from its objective of 99.5. Still, there is divergence when it comes to the euro as well. So with the Australian dollar and also the euro could see some profit taking and see a pull back towards the region of 111.40 to around 110.45 to 85. Upside attempts may find a little bit of a difficult move beyond, that is at 112 figure 15. As the dollar weighs heavily, we can see that Japanese yen has strengthened and now very close to its objective of 142. In light of how the market is performing, I still feel there could be even further risk to the downside. And if we see a break beneath 142 and 141.60 confirmation, then therefore could expose the region anywhere as low as 130 as a broader call. But looking at the shorter term, the downside does appear to be on track with the ADX holding as a bear trend and also the rejection from the midway point on the RSI. The immediate target is seen at 143.45 and then on towards 142. Any upside attempts should find difficulty around 144.5 to 144.90. Turning to the British pound, we can see it's surged 100 points on Friday, fueled by the Fed chairman's dovish speech, and also marking its 7th consecutive bull run, and therefore warrants a pullback to around 131 and reassess. But that being said, if we see a close above 132.40, could see this trend continue on to 133.5. Wrapping up with commodities, a rebound in spot gold has put the market back on track to target the level around 2,550. That could extend on to 2,600 to 700. In light of how bargain hunters continue to snap up the market under 2,500, may see this happen again. Wrapping up with oil, we can see that also has rebounded and now on track to look to that topside target around 77.80 to around 78.80. With any pullback, well, I feel the base is forming now and clearly from that bottom side of 71.5. Well, that's a wrap. Thank you for joining me, and as always, look out for the interest report, and I hope you enjoy the great start to the new week.